Hey everyone, in case you missed it, this afternoon had a great discussion with Jim Luebbe of James Luebbe CPAs. We talked about some year-end tax planning for business owners during our Facebook Live discussion. So if you weren't able to attend it live, here's the recording of that video. I hope you enjoy. Thank you for hopping on the call today. And the purpose of this call is some year-end tax planning for business owners. So what are some things that people can do between now and the end of the year to potentially either reduce their tax bill or things that they might want to be prepared for, so they don't see a large tax bill or they're surprised by something when they go to file their taxes. So I've got a couple questions to ask Jim today, and then like I said, we'll be posting this video to the group. So for those of you that need help with any sort of tax planning or either tax preparation, feel free to reach out to Jim and his firm to do a great job with helping you there. So Jim, to get started today, if you wouldn't mind sharing just in general, what are some things that business owners can do to help reduce their taxes at the end of the year?
Well, typically this time of year, we do a lot of tax projections. So we're looking at their year-to-date wages, projected wages for the remainder of the year, and looking at their withholdings and their estimated tax payments. So, we want to make sure that they're on target. It's not uncommon, if they've had an increase in income for the current year, we've got 2 months to adjust their withholdings if we need to, and possibly adjust their fourth quarter estimate that's due January 15th. So, and we've got situations where, the income is decreased from the prior year. So, the taxpayer may not have to make that fourth quarter estimated tax payment. So it's important, perfect time of year to go ahead and do those projections and see where you're at. The other thing is to make sure that you take advantage, and if you're able to fully fund your tax deferred accounts. That's your 401k account, that's your simple IRA, and if you're a sole proprietor, maybe start putting some money away into your solo 401k or into your SEP plan. And that includes your health savings account as well. Make sure you fully fund your HSA if possible. Another thing to look at is an S election. So typically I tell clients that, if your income is going to be around 6 figures and you're a sole proprietor or a taxes partnership, that's the ideal time to look at doing the S election and possibly saving on self-employment taxes. I just had a conversation with a client this week, and we're thinking about 2023 already. They're expecting to have a great year next year based upon the workload in the pipeline. So we're going to make an S election for 2023. So you can also think about the current year, but think ahead to next year if you can as well.
Yep. The
other thing is the bonus depreciation. If you need any equipment, the bonus depreciation is currently at 100% for 2022, but that will reduce 20% over the next coming years. So in 2027, that will be 0. So this will be the last year to take advantage of the 100% bonus depreciation.
Okay, great. Yeah, so those are all great pieces of advice, and definitely looking at those projections can be very beneficial. Whether they keep their books in QuickBooks, or I know you do some bookkeeping for clients as well. So having an idea of that profit and loss and seeing where things might shake out, might fall, is great, very beneficial. And yeah, like you mentioned, the retirement plan contributions, make sure that you're fully up to the maximum amount that you can put in. And then in 2022, we saw a little bit of an increase from 21. In 2023, we're going to see an even larger increase. So historically speaking, 2023, those contribution limits are going up by a historic amount, just based off of the record high inflation we've seen this year. So, yeah, that's great. And Jim, you mentioned an S election for you, and I'm familiar with that. I know that you kind of determine a salary, and then you're paying those FICA taxes on your salary. But if you wouldn't mind, just kind of a brief synopsis of why that might be beneficial for people, as you said, as they reach that 200,000 or more in revenue level, what are some of the benefits of that?
So, like I said, the main savings is on the self-employment tax. So, if your tax is a partnership, you're going to pay the Social Security Medicare on 100% of your profit. So, if you're at $100,000 profit, the self-employment taxes, you're going to be paying on those, is roughly $15,000.
Yep.
If you make that S election, you pay yourself a salary, and typically starting out, I like to have the wage to profit allocation like around 50-50, at least starting out. So if you make that election and you have a $50,000 W-2 income, you're cutting that $15,000 in half. So that's immediate $7,500 tax savings.
Yeah, that's great. That's something definitely to take advantage of and to look at as well. So the other thing that I've heard a lot that I get questions on from clients, or things that you might read or hear about when they're discussing taxes, is adding your kids to payroll, right? So if you've got teenage children, maybe if they're in high school, maybe some in college, that could potentially do some work around the office or work at your business, as a way for the parent to reduce taxes at their tax bracket and kind of pass those on to the children. So what are some strategies for potentially adding your kids to payroll?
So, with the standard deduction being close to 13,000 now, so you could pay your child up to the standard deduction and they won't pay any income tax on that. If you are an owner of a sole proprietor, or you have a husband and wife partnership that's owned 50-50, you could pay your kids as well. And under a sole proprietor partnership, you don't have to pay Social Security and Medicare on those wages. So you have a FICA exemption. So that can be a fair amount of savings. Now, if you're an S Corp or C Corp, you don't have that luxury. You don't have that FICA exemption. So you will have to pay Social Security and Medicare for the S Corps and C Corps.
Got it.
So.
Okay. And are there any red flags to be aware of with that? Things that people should watch out for?
Well, you want to make sure that the work the kids are doing are legit. Kids can clean around the office. They can do some filing for you. Teenagers, they can do some data entry for you. So just make sure the work they're doing is legit. You want to make sure that you pay them the going rate. Make sure you're in compliance with the federal, state child labor laws.
Yeah.
And then, of course, at the end of the year, make sure that you issue them a W-2.
Okay. Right. Good. Yeah. So, so when it comes to prepayments or tax withholdings, as we get to the end of the year, what's some advice around there? Rather should people be looking to prepay some of their taxes more? Should they look back at their previous quarters and their withholding? What do you typically advise on around this time of year?
Well, typically, as far as withholdings go, we base a lot of the withholdings based upon prior year. So if the client has a significant increase or decrease in income, and you're going to want to adjust your withholdings. Now, obviously, partnerships and S corporations, they typically make estimated tax payments because they need to pay the tax, get the tax paid in on that profit. At least with an S corporation, you do have a W-2 where you have the opportunity to pay some tax in through withholding, as opposed to a partnership where you don't. You have to make those estimated tax payments.
Yeah.
And, we try to make sure that, we get our clients to pay each quarter. You got the fourth quarter coming up in January, but, we want our clients to get in the habit of making those quarterly estimated tax payments because, once you get behind, it's hard to catch up. It's not uncommon for folks that, get behind, they don't make those estimated tax payments, and they have a big tax bill on April 15th. So in addition to having owing for the prior year tax, April 15th is when that first quarter is due as well.
Yeah.
And
right.
it can be tough to come up with, that payment. So get in the habit of making those estimated tax payments. Quarterly.
Yeah, that's a good point. I had that last year. It's a real quick turnaround. You're paying your tax bill, and then here you go. Now you got your first quarter payment that needs to come out as well. So
and then you got the second quarter. Second quarter is 2 months later on June 15th.
Yeah.
So you don't have a whole lot of time to catch up on those first 2 quarters. Yeah.
That's a great thought. Great, definitely something to think about. So, so are there, last question today, it's just as I'm wrapping up, any sort of unique, case studies or ways that you have, helped business owners to get some money back that they weren't typically expecting, or save some money on taxes that, might be out of the ordinary?
Well, right now, a hot topic is the employee retention credit. And you're hearing commercials on the radio every day. I don't know how many phone calls I've gotten asking.
I'm getting calls on that too. Yeah.
It's been crazy. So one of the main qualification is that you've had a significant decrease in your gross receipts. But don't let that stop you from looking into it. I've had clients that have had an increase and still qualified. So we outsource the employee retention credit to another CPA firm. It's just something that we haven't specialized in, and these guys have. So we've had our clients have a lot of success with filing for the ERC. You do that through amending your 941 payroll tax return, and it's for 2020 and 2021. And the good news is you've got 3 years to amend that return from the original time that you filed that 941. So you do have some time.
Okay. Yeah, that's great. That's definitely something to think about and be aware of. So, but yeah, Jim, I know you're probably maybe starting to ramp up here with clients towards the end of the year, but I appreciate you taking some time today to hop on the video and talk with us and sharing a lot of your expertise.
No problem. Enjoyed it. Anytime.
All right. Thanks, Jim.
All right. Talk to you later.